About your 401k, stocks, and other investments. So what should you do with your money? Joining us now from New York, certified financial planner Paula Kennedy, and in Los Angeles, Peter Schiff, president and CEO of Euro Pacific Capital. As you can imagine, you guys, as soon as we started talking about this segment, soliciting emails, we got hundreds of them. So I just want to get right to it and get your advice. Here we go. Patricia asks, I have $262,000 invested in mutual funds, and I have lost a lot of money. I'm 68 years old, and this was my nest egg. I have $95,000 in cash reserves. Should I sell or hold out for a market increase? Peter?
Well, you know, it's going to be difficult. You know, unfortunately, what the government is doing, they're in the process of turning this recession into a depression. It's going to last for a long time, and unfortunately, the bear market in stocks, which has been going on since 2000, is going to continue for many, many years. But what she has to understand is that the bear market in the bonds, which hasn't even begun yet, is likely to be even worse over time. So I think in the long run, Americans are going to lose even more money in bonds and in cash than they will in stocks. So I think that she doesn't want to leave stocks, but I think she should look internationally. There's a lot more bargains outside the United States and inside the United States. Valuations are much better, and their governments are not undermining their economies to the extent that our government is undermining ours. And I think she should also look at commodities and precious metals, particularly gold and silver.
Paula, what do you think? Because just last week, my financial planner was saying go with bonds.
Well, I'm a bit less pessimistic than Peter, both with regards to the stimulus spending and with regards to the economy. I think 2009 is going to be pretty rough for everyone. But I do think that over the long run, the best way to have your money is in a diversified portfolio with some cash, some stocks, and some bonds.
All right, Scott in Tennessee says, I have been at my place of employment for 1 year. I now qualify to participate in the company 401k. The company matches 50 cents on the dollar up to 6%. Should I get in now or wait? Paula?
You should definitely max your match. Go for that 6%. You'll get 3% from the company. If you don't do that, you're leaving money on the table.
All right, this one goes to you. Go ahead, Peter.
Well, I would say just, you know, if you're going to invest in the U.S. stock market at all, don't try to diversify across the entire market, because certain sectors like financials, like retailers, are going to just be disasters, and they're going to continue to fall. So to the extent that you're in the U.S. market, you want to be in real businesses with good balance sheets that export a lot to the rest of the world.
All right, here we go. Barbara in Idaho says, my husband and I are 58 and 61, respectively. Since the collapse, our IRA accounts are down to $120K, half their value. We're still in a growth portfolio. Do we need to wait until we're 90 to retire, or do you have any suggestions? You kind of tapped on that, Paula, but can you add more to what they're asking specifically?
I think that if you're scared right now, it's a good time to look at your portfolio and see if you're in the right places for the long term. The only way to invest is for the long term. Sounds like they were too heavily in growth and too heavily in equities for their risk tolerance. It's a good time to get a grip on your emotions, take a look at your portfolio, and perhaps restructure it. But I think you should build a portfolio for the long term, and I think you should leave it well diversified.
Peter, you want to add?
Well, if you're going to build a portfolio for the long term, you have to understand that the long term for the U.S. economy is very bleak. You know, there is zero chance that what the president is doing is going to work. There's a 100% chance it's going to make the economy much worse. But what they can do is take advantage of the fact that stock markets around the world have fallen in sympathy with ours. And there are stocks around the world in other countries, particularly in Asia, like Hong Kong and Singapore. There are a lot of stocks that are paying 10 and 15% dividend yields right now. A lot of stocks with good balance sheet that can really offer good current yield and a lot of potential for growth. So people just need to look abroad and understand how the world is changing and how that's going to affect the value of U.S. assets.
Peter Schiff, Paula Kennedy, thanks, guys.
You're welcome.
We're going to take a quick break. We'll be right back.